Good morning, everyone. Today is June 4th, Saturday. This special update is to highlight the potential extended devaluation of the global markets as we move forward, particularly highlighting Bitcoin and cryptos. There's a couple of things I want to point out. First, you're looking at this long-term chart that shows weekly Bitcoin trading activity. And you can see I've highlighted the first speculative phase, which was 2017-18. And then we had the second speculative phase, which was 2020 after COVID. And this was really a period of time where after Trump was elected, new tax policy took place. We had kind of a bump in the economy. Everyone was doing very, very well. And we had a big bump in Bitcoin from roughly 3,000 up to about 20 grand. Then we went into an extended consolidation period, and we went into the second speculative phase, which was after COVID, where the Feds dropped rates and consumers really got into a hyper speculative phase. This was when the meme stocks took over and the stock market really started to accelerate upward. We've now moved into this third wave of the excess phase blow-off peak. Really, it starts here as one, and you can see it happen here as well. It peaked out, came down, stalled into a sideways channel, these three bars, then rolled into a sideways basing across here, then broke down and eventually bottomed. Where we're at right now, ladies and gentlemen, is we've blown past this peak. We've broken down to new lows. Now we're likely going to move into a potentially sideways trending channel for maybe a couple of weeks or a couple of months, and then eventually roll down into this $20,000 purple level. My gut tells me that this end of speculative phase could be much more dangerous than a lot of people think. We could see this unwinding move back below this 20,000 peak level here, this purple line, back down into this area, 10,000. And try to retest this support level here. A lot of crypto bulls are telling us that don't worry, this is the bottom. I'm seeing this as a broad unwinding cycle. And what I'm going to show you next is how this broad unwinding cycle is likely going to continue. So pay attention to this chart. Right now, my downside targets in crypto are 19,764, which would be this peak, a retest of this peak. But ultimately, the unwinding cycle could move much lower and end up back below 8,500, potentially targeting these lows back over here, which would be a very massive 90% unwinding from these peaks. Now, we want to highlight this, which is my custom volatility index, and understand that the custom volatility index has changed direction. You can see this upward trending channel lasted until October or so, really back over here, June, July of 2021. Then we rolled into this last phase peak near October, November of 2021, and now we're in this downward cycle flagging out. I think we're going to see a week or two of upward activity before it rolls back over, breaks down below this 6.0 level, and really starts to contract downward. So pay attention that this is not a great bottom. This is not a real opportunity yet, and I'm going to explain to you why as we move forward. Next, I want to highlight, I can find it real quick. Let me just come over here, and here we go. Global Asset Index. The custom Global Asset Index is showing us that assets are still extremely high. We have not seen an unwinding of global asset prices yet. We've broken this trend channel. We have a massive rally. When you look at this, it's inverted. So you can see we've come from roughly 1.5 to 0.6. This is essentially a 65% increase in asset prices. When you figure it out on a basis, this is really a little over 100%, 120% rally in the markets. If we were to just look at this level and understand where we need to be on a midpoint basis, we would be looking at levels back down here in the 1.0 to 1.1 area, right over in this area, as a global unwinding. From 0.67, where we're at 0.67 down to this 1.0 to 1.1 area, we're looking at about a 40 to 50% decrease in assets to unwind the speculative bubble that's taken place over the last 12 years. Potentially moving back down into this area. This is the 2013, 14, 15 area, where we're starting to see some real standard valuation levels. So if we were to look at Bitcoin, where we're at right now, and we were to look at a 40 to 42% decrease, assumably from this level, we would take where we're at right now, this is Bitcoin futures, move down to a 41 to 42% level. This puts us down in the $16,000, $17,000 range. And again, I think we're likely to move back down into these previous support resistance area, about in this area, which would mean that we're looking at, for Bitcoin, a real unwinding of potentially 60 to 70% from current levels. Now, a lot of you are going to say, oh, that can't happen. That can't happen. Bitcoin is supported by so many people. I want you to understand that Bitcoin has seen an incredible rally because of the once-in-a-lifetime opportunity that took place in regard to the speculative bubble that has taken place. We are now in this phase. We've seen this blow-off peak, which came up to about here and duplicated the channel right up here, about like this. We've now seen this blow off. So here's the rally phase, the speculative top, come down, establish support, which we could hypothetically come in and say, okay, so we have support down near this level. I'll draw it as a different color so we can see it. Make it a little thicker. We have support in this area. We have the second phase of the excess phase top up to this peak here. You can see how it attempted to get above this previous peak level and failed, rolled over. Now we're down below these lows. We're looking for a breakdown to take place. What would happen in this case is we would see a breakdown potentially down into this area, potentially form some support, and then a breakdown further. That's what is going to happen, in my opinion, as this bubble continues to erode, and Bitcoin may end up finding some support around this 6 to 7,000 range. So let me draw this as 6,000 here, 8,000 there. So somewhere in this range, I believe Bitcoin is going to attempt to find some real support. And the reality is, I'm going to get rid of this, duplicate this, and drag it down to about 6,000. Close enough. That's about 6,000. And really, ladies and gentlemen, that's where we're looking. So you need to be aware that the markets are unwinding. What's happening is we're in a global unwinding phase, and as I've tried to explain to you here with the volatility index and the asset index, we're in an unwinding phase. We've just crossed below these levels, meaning we're now in new territory. This is a broad, longer-term trend lasting from the bottom in 2009 all the way up. We've broken this level now. Assets are unwinding, and they will continue to unwind as the Fed tries to burst the inflation bubble. That means that we're going to be losing the speculative bubble edge. We're no longer seeing this rally phase, this extended speculative phase taking place, and assets are going to continue to contract. That means that Bitcoin at these levels has nowhere to go but downward. You might get a couple of little bounces, but it's going to run into a lot of resistance moving higher. Ultimately, you're looking at a $20,000 base, in my opinion, in Bitcoin. It will likely try to find some support here just because of this previous peak, then ultimately move back down into this area here. Okay, there's your update. Pay attention. Follow me on Twitter. Follow my YouTube. This is going to be a huge opportunity when this bottom ends. And I know approximately when it's going to end, but we don't know yet how it's going to end.